Hello and welcome. You're watching ET Markets. I'm Tanya Aneja, and today I have with me a very special guest. Mr. AK Prabhakar, Head of Research at IDBI Capital, is joining us to share his thoughts on the markets, sectors looking attractive, especially after the recent correction, and much more. Thank you so much, Mr. AK Prabhakar, for joining us on ET Markets.
Good morning.
Mr. Prabhakar, the first 5 months have been nothing short of a roller coaster ride for investors. So will it take some more time for the Indian market to find a bottom? And also, what should investors do, especially at this point in time?
So this is very interesting. We need to understand it is not 5 months. It is almost 8 months that we made an all-time high. So we have been correcting from October last year itself, where after making an all-time high, we have been correcting. But now we need to understand, in last 14 years, we have never seen any meaningful correction. So because of the easy liquidity flow, zero interest rates in many countries, so we have never seen a reasonable correction. Now things have changed. Now every central bank wants to reduce the free flow of money. And they want to hike interest rate also. We are in a unique situation. So I feel that this correction can last, or this grinding can last for another 5 to 8 months. So but there are sectors and the stocks which will always outperform any market, let it be a bear market or a bull market. So we need to be very specific, but it is not a market where it is easy to make money. You need to be mindful of what kind of market we are. And I've never seen a market where crude is now constantly above $100. This is the first time in last 32 years I am seeing this kind of scenario where crude is almost stuck up at above $100. So this kind of thing makes it very difficult for India.
Absolutely. And there is another risk on the horizon, which is rising COVID cases. So do you think this is something market has moved on from?
See, in India, we are not very strict, and we won't be very strict because livelihood is more important than COVID. So already, most of the people in India are vaccinated. So life moves on. So I don't think we will have any major COVID restriction. There can be a minor restriction here and there, but as majority of the population is vaccinated, I don't think that should be a worry.
Absolutely. And where are you seeing pockets of opportunities at this point in time? I mean, which sectors are looking attractive, especially after the recent correction, and the sectors which you are betting on?
See, post-COVID, hotel is where I'm seeing a lot of traction. And Indian hotel balance sheet came, where they have more than 200 hotels and 25,000 keys, that is rooms. And in their balance sheet, they say almost by FY25, they will have 300 hotels and 30,000 rooms. And their occupancy ratio and ARR has also improved. And Indian hotel has become a debt-free hotel. So I think people the madness to travel is making we are not getting bookings also, many hotels tourist spots. So I think hotel as an industry will do very good. We like Indian hotel, we like Lemon Tree, we like Chevrolet, we like Mahindra Holiday also. So hotel as an industry will do good. Now even if the interest rate goes up or if market is incorrect, maybe these stocks might not perform. They will not go down, but they might not perform. But once the recovery process starts in the market, then the best return will come from hotels. And due to COVID, life insurance as a sector has not performed because they had very high COVID claims. So HDFC Life, SBI Life, and in health insurance we like Star Health, which posted loss due to COVID claims. Now, as COVID is a major part of the COVID thing is behind us, I think health insurance and life insurance is one more sector which is likely to do well.
And what about the sectors you're underweight on amid an uncertain global environment?
See, there are many places where uncertainty is there, but let us not touch those uncertainties. There are companies which are linked to global supply chain where they are impacted. But let us look at the opportunities only. I feel there was one data where wheat prices have gone up. Because due to that, tractor demand has come back. We are very positive on Mahindra, and we have the highest target for Mahindra. So I think there is a good opportunity. This stock has not performed in the last 7-8 years. So what has not performed is now performing. That is more important. And if you look at year till date, Mahindra is one of the best performer in Nifty, including ITC and Mahindra. So there are opportunities. So let us look at the opportunities. It is more. And even defense-related stock, due to the problem in Russia and Ukraine, defense-related opportunities have opened up. And Indian budget towards defense is 1,52,000 crores, out of which they say 68% will be procured locally. That means there is a huge opportunity. You check any interview given by this defense PSUs, their order book is ever bulging. You take Mazagon. They say their order book is 45,000 crores, whereas their top line is only 5,600 crores. You have Hindustan Aeronautics. Again, they have a capacity constraint. That is a level of manufacturing which is happening in India. BEL, they have 57,000 crores of order book. And they are growing at 12 to 15%. So there are PSU which are priced attractively, and any correction would be an opportunity to buy defense-related stock. It be even like Bharat Forge. Bharat Forge, they are getting into EV space, and they said, we are ready for any defense order. So if defense order comes, then that stock will do very good. So there are opportunities across the board, but yeah, due to correction, these stock might not perform. But once the market makes a bottom, maybe by Diwali or year end, then I think things will start to improve on the positive side.
Absolutely. And also, Mr. Prabhakar, do you think the recession fears are real for global economies, and India would also not be immune?
So, globally, yes. I think recession is on cards, but India is in a unique spot. There are many things which are going for India, so we might not get into that. This thing I feel so. Because our IT export last year, IT services, it was $250 billion, and even our exports have done, and China plus one policy and PLI schemes in few things have worked very good, and the government has been very dynamic. If the PLI scheme is not working, they come with a new working, and they are trying to make industry manufacture in India. There was one data which said that in 2016 or 17, we exported about 1,600 crores of mobile phones. And that time we were net importers. Today we have become net exporters, and we have exported about 46,000 crore. That is a change due to PLI scheme. So if these schemes are implemented properly, then India will be in a sweet spot. And there are many things which are happening dynamically. Free trade agreement we have signed with two countries. One is UAE, and other thing is Australia. And there are many things which are on pipeline. So I think we are India is trying a lot of things, and China plus one policy and PLI scheme and other things also are working in our favor. So I don't think we should too much worry on recession, slowdown, and all. We need to look at correction as an opportunity for a long-term investor.
Absolutely, we need to look at it as an opportunity. So before we let you go, Mr. Prabhakar, your advice for all the first-time investors and young investors, especially because it's a tough market right now. So what would be your advice for them?
So in 2020 March, there were around 4 crore of Demat account. Today you have 9 crore of Demat account. So the growth, most of the people who have entered, more than 50-60% of today's investors have come post-COVID, and they have never seen a bear market. And many people in the last 10 years also have not seen the bear market. After 2008, there was not a meaningful correction. There were few places where market didn't perform, but we didn't have a correction like 2008 or 2000 to 2003 correction. We have not seen it. So for them it will be a very difficult period. But if you are in quality stock and quality growth stock, I don't think you need to worry much. Next decade will belong to India. There are many statements which are coming from different sources where 26, 27 India will be a $5 trillion economy, and very soon 10, 15 and $20 trillion economy. So growth is here to stay. I've seen what has happened in China, and if we can work meticulously towards that, I think we will be one of the largest economy in the world. Already we are getting into that place. So why one should worry, I don't know. But yes, if you are leveraged or if you are in F&O, then there is a problem. So avoid leverage. Buy in cash and buy systematically so that this time also will pass.
Absolutely. On that note, Mr. AK Prabhakar, thank you so much for taking the time out and being with us on ET Markets. Thank you so much.